we are witnessing the dawn of a new monetary era as the market reasserts thousands of years of history after a brief artificial distortion.
Happy Monday, folks, and a really important short video for you today. So remember back in 2020 we began to be aware of the Great Reset? Well, the truth is it's mainly a financial and monetary reset. So the crucial thing to do is to make sure you're hedged against it. So there's a few great videos came out in the last couple of days. Really the reset is beginning now in earnest. And the great news is you can arrange to be minimally affected by it for you, your family, and your future. Anyway, we now have verification in the last few days of where the stock market and pensions, etc. are going. So you got to be aware of that. And the first sequence in this video I'm going to show you, very short, is around Bitcoin. Don't worry if you're not interested in Bitcoin, because a bigger point is being made. The Bitcoin is only reflecting where the stock market and other risk assets and tech stocks are going. So it's very important as an indicator of what's actually happening. So here you go, first segment.
And let's just really dig into the speed of this collapse, the sheer velocity of it. We're talking about a fall from almost $92,000 all the way down to under $86,000. But here's the most important part, the part that causes the real damage. It happened in under 2 hours. It's a true waterfall event where you're watching the screen and the bids, the buy orders, they just evaporate. They vanish into thin air.
Here's the kicker, the part that really just twists the knife. After all the hype, all the excitement, all the incredible gains throughout the year that absolutely dominated the financial news, this one event, this one morning, is so devastating that for the entire year of 2025, Bitcoin is now in the red. A complete, total, shocking reversal of fortune.
So that collapse is just showing us where the rest of the risk assets are going. And unfortunately, most people's pensions and etc. and savings are in risk assets. Now, I sold nearly all my Bitcoin a few weeks ago because I kind of knew from my financial network, etc., of what was going to happen. And indeed, now it's happened. But let's look at the crucial next clip, where the money is going to go. And that's really the thing you need to know.
But, and this is maybe the most important part of this whole story, this is not happening in a vacuum. This implosion isn't an isolated event, because while all of this chaos is unfolding in the Bitcoin market, a completely different story is playing out somewhere else. And it's not just a different story, it's a perfect mirror image. It's the exact opposite. Just look at this. The contrast here is just staggering. While Bitcoin is turning negative for the year, look at what's happening with hard assets. Silver is up an incredible 89% year to date. It's not just up, it's absolutely ripping to a new all-time high over $58 an ounce. And then you've got gold, you know, the big steady one. Well, it's right there with it, printing another record high at $4,245, putting it up a whopping 61% on the year. This isn't just a difference in performance. This shows a completely different character. One asset is acting like a hyper-speculative risk-on bet, and the others are acting like true safe havens. The divergence could not possibly be more clear.
So here's the crucial takeaway. These two massive events happening at the exact same time, it's not a fluke. It's not random market noise. No way. This is the signal. This is a clear, undeniable signal of a massive rotation of capital. What you're watching is money fleeing one asset class in absolute terror and desperately seeking safety and real value in another. And according to this thesis, this is only just the beginning.
Now we'll go in really briefly to the reasons behind, the mechanisms as to why this is happening. It's all part of the reset, but liquidity is a big part. So a super short little sequence to give you an overview of liquidity shifts.
So, of course, this leads to the big question. Why? Why is this all happening right now and with such incredible violence? And the answer is that the entire macroeconomic environment, the very soil in which all of these assets grow, it has fundamentally changed. The rules of the game, the ones that dominated the last few years, they've just been thrown right out the window. Okay, so this slide right here, this is the whole story. It perfectly illustrates the before and after. You have to understand this shift. For years, right, from 2021 through 2024, the world was literally awash in free money from central bank printing. We had negative real interest rates, which is just a fancy way of saying that if you parked your money in cash or safe bonds, inflation was eating it away faster than you were earning any interest. You were guaranteed to lose purchasing power. This environment forced investors. It pushed them out onto the risk curve, into speculative assets, in a desperate search for any kind of return. It fueled these things called global carry trades, basically borrowing super cheap money to invest in high-growth, high-risk assets. And Bitcoin, it was one of the prime beneficiaries. But now, in late 2025, that entire world is gone. The free money spigot has been turned off. Liquidity is tightening up, real interest rates are finally turning positive, and all of those carry trades, they are violently, painfully unwinding.
Okay then, now I shortened that a lot and I took out the Japanese carry trade and a lot of other technical stuff about leverage I don't think most people need to know. But the next sequence clarifies that the Bitcoin and all of these cryptos, they're not really digital gold at all. There's only one gold, there's only one silver, and it's the future. And importantly, remember, this isn't really about the Bitcoin per se. The Bitcoin is reflecting what's going to happen all of the risk assets, stock market, tech stocks that are holding up the whole market. So that's an important point to keep in mind.
It completely reframes the entire argument. For years, the marketing pitch for Bitcoin was digital gold, right? A safe haven, a hedge against inflation and government turmoil. But its actual behavior, how it acts when there's a real crisis, it tells a completely different story. In this new environment, its true character is finally revealed. It's not a store of value. It's a high-beta, speculative asset that acts just like a leveraged tech stock. And when the global cost of that leverage goes up, the whole structure begins to crumble under its own weight. And hey, don't just take my word for it. The data, the raw numbers, they tell the exact same story. Look at the capital flows here. A net $3.5 billion fled Bitcoin ETFs in November alone. Capital is literally running for the exits. At the same time, the entire system is choked with leverage. U.S. margin debt is hitting an all-time high of $1.2 trillion. That means more investors than ever are borrowing money to speculate. And maybe most telling of all, its correlation to the NASDAQ, the tech stock index, is a very high 0.72. A correlation of 1 means they move in perfect lockstep. So what does this picture tell you? It's crystal clear. Capital is fleeing, the system is way over-leveraged, and it trades exactly like a risk-on tech stock, not a safe haven.
Okay, segment 4. A hard money rotation is underway.
So if you've got this torrent of money rushing out of Bitcoin and other over-leveraged risky assets, it has to go somewhere, right? Money never really disappears. It just changes hands. It finds a new home. So this next part is all about tracing the path of that capital flight to its new destination.
This is the multi-trillion-dollar question, isn't it? When the margin calls start hitting and real panic sets in, where does all that money go? It desperately searches for safety, for a real store of value. And think about the options. It's not going into cash because even with slightly positive real yields, inflation is still a major problem. It's certainly not going into bonds, which are getting hammered by the exact same rise in yields that's causing this whole problem in the first place. And it's not staying in the broader stock market, which is falling right alongside other risk assets as liquidity dries up. So where does it go?
And you know what? The market is giving us the answer. Loud and clear. This chart right here, this is the scoreboard for 2025. This is the tape, this is the market speaking directly to us, and it tells you everything you need to know in the starkest possible terms. You see the absolutely massive outperformance of silver at plus 89%. You see gold right behind it, plus 61%. And then all the way at the bottom, you see Bitcoin, negative for the year. The capital is flowing into the only assets that have zero counterparty risk and have thrived for thousands of years whenever monetary regimes begin to change. Physical gold and physical silver.
And now we'll get into a proof point. So that's a word we use in engineering, something that proves an underlying mechanism. So silver is the proof point. And last Friday, the futures market that tries to keep the price of physical silver down basically blew and had to pull the plug on the servers for 10 hours to try and stop silver skyrocketing and messing up all the banksters. So silver's the proof point. Just take a look at this segment.
And if you want the single most potent, the most explosive piece of evidence for this hard money rotation, you have to look at silver. It's the extreme example, it's the killer proof. And that's because its underlying fundamental situation is so incredibly tight that it just becomes absolutely explosive in this kind of environment.
So let's break down exactly why silver becomes the main event. It's a pretty simple story, really. It's just hardcore, basic supply and demand. First, there is a massive structural imbalance between physical supply and demand. For years now, the world's industrial and investment demand has outstripped what's being mined, leading to an annual deficit of 200 to 300 million ounces. We are simply using way more silver than we produce, year after year.
Second, the available deliverable stockpiles on the exchanges. We're talking about the actual physical bars of silver that can be delivered to a buyer. They are at critically low levels, under 140 million ounces. That is less than 6 months' worth of the annual deficit. So when you have a massive, ongoing deficit and a rapidly dwindling inventory, the result is inevitable. The price has to disconnect from the paper futures market and it enters what's called full price discovery mode. The market is forced to find a price, no matter how high it has to go, that can finally bring supply and demand back into balance.
And now I've edited out the essence of segment 5, where it's all going. We're pulling it all together.
So, let's pull all of these threads together now. Let's tie it all up into one final, hard-hitting argument. What we are witnessing here is not just some random market event. We are witnessing the dawn of a new monetary era, as the market reasserts thousands of years of history after a brief, artificial distortion. This is it. This is the new reality boiled down, point by point. Real interest rates are rising, and that destroys the entire thesis for holding speculative assets that don't produce anything. The massive carry trades that provided the fuel for the everything bubble are blowing up. As that happens, liquidity is being violently pulled from the riskiest corners of the market. That capital is now stampeding into the only true safe havens, physical hard money. And here's the most crucial point of all. The era of the infinite fiat on-ramp into assets like Bitcoin, an era fueled by endless central bank money printing, is over. That bridge is broke. So, what's the takeaway? It's simple. This isn't a forecast. It's not just an opinion. The argument here is that this is what the tape, what the charts, are telling us right now, on this hypothetical day. The price action is the final judge, jury, and executioner. The rotation isn't coming anymore. It's here. It's happening. It's live.
That's it, guys. It's here, it's happening, it's live. It's no longer a theory. And the last week or so, we've seen the real start of the financial reset, the biggest part of the Great Reset. So if you want to take action, explore further, I really tried to edit this down to give you the core for the layperson. But if you want to take action and explore things further, I suggest you might go to Pure Gold in London. They have vaults all over the world. They service America and all of Europe. There's a free period of storage, I believe, with my link and a free consultation. So they'll bring you through anything further you need to know. I took action many years ago. And of course, all my followers who have followed up and taken action, they're now up 2x on average on their investments or pension that they've put safely into the physical. And that's fantastic. But the road, as you can see from this short video, has a long way to go as the Great Reset, the financial reset, actually really gathers pace. So there you go. I'll leave you with a clip from Egon von Greers. I'm going to interview him shortly, put it here in the channel. And his partner is Matthew Piepenburg, a pal of mine. They're the smartest guys in the room. And they were in around the year 2000 when gold was $300 and silver was, I don't know, a few dollars. So they were in way ahead of everyone. They've got a huge company taking care of people like Pure Gold do. And I just think Von Greers here is an excellent way to lead out this video. Good luck.
I expect over the next, let's say, 5 or less years, that silver will move up by multiples. And when I say multiples, it's many times from here. It's not a question of just the metals moving up, but it is actually paper money moving down, because we are seeing at the end of a monetary era now. Every single period in history has consisted of the end of paper money. And we are at such a period now. And therefore, we will see acceleration of the decline of paper money and acceleration up of precious metals. But remember, there is massive shortages of especially silver. There will also be shortages of gold. Industrial demand for silver has gone from 10% of total production to now 50%. It's obviously used for solar panels, for car batteries, for a lot of electrical and electronic products. And also on top of that, of course, we have the investment demand. When you look at the industrial demand, 50%, you cannot use paper silver to build solar cells or to build car batteries. You need, obviously, physical silver for that, and the market is not going to be able to supply that at these prices. And that is one of the main reasons why silver prices will go up substantially. On top of that, of course, silver has always been poor man's gold, but now it will be rich man's silver at the same time as it continues to serve as gold and silver as the best wealth preservation investment there is.